Hi, everybody. Welcome to our first Facebook Live for tax season 2022. My name is Ida Celli, and I will be your co-host today. We will give you a few instructions here to ask us your tax questions. Please write it in in the comment section right underneath the video, and we will answer your questions one at a time. We will ask you to stay with one question as we have just a 1 hour restriction at the moment. So without any further ado, here's my colleague who will be answering your tax questions, Jerry Vitaratis. Hi, Jerry. How are you?
Not too bad, Ida. How's it going?
Pretty good. Cold, but but
Yeah.
I'm good.
Yeah, today is just an ugly day here in Montreal, and I'm sure actually I think it's all of southwest southern Ontario and Quebec as well. It's just an absolutely ugly day today, but we're nice and cooped up inside and ready to answer tax questions. So let's see what will come in, and
Exactly.
we'll answer your
Um,
questions.
yeah, why don't you start off giving us when is the tax deadline or some important dates before
So
so that we don't
yes,
forget?
so the deadline this year will be May 1st because April 30th falls on a Sunday, right? If memory serves me here, it'll fall on a Sunday in this case. So May 1st is our deadline. So if remember, the deadline is basically if you have an amount owing, you have to pay it by April 30th. You have to file your return, excuse me, by May 1st. And you have to file your return by May 1st as well. Otherwise, penalties will apply, and then interest charges will apply as well. Okay, so that's the key there. Now, for those of you who are self-employed, your deadline is June 15th in order not to pay any penalties. However, in this case, you still owe the money um, by May 1st, right? So if you have a balance owing on your tax return, May 1st is your deadline in this case. So I think we
We
got our
got a
first
first
question, huh?
question.
Yeah.
So
All
hello,
right.
Aneta. Thank you. Where in U-File can I enter
Split
split
pensioning.
income, pension income for me and my husband?
Okay, so Aneta, in this case, you will simply enter your pension income amount, the pension income that was received during the year, in what's called in your file and your husband's file, and then the program will split that amount automatically for you. There's nothing to do in that case unless you want to control the split and choose what amount you want to split, which I do not recommend because that could be, it's a circular calculations. You're going to be playing for hours and hours to try to see whether you get a better result in the software. The UFile will give you the best result in this case. So your best bet in that case would be, so you simply enter your pension income, whether it's a T4 RSP, a T4 RIF slip, or a T4A slip, and the program will handle the rest. It will simply split between you and your spouse automatically.
All right. Our next question is from Vincent. Is
Mhm.
autofill working? I keep getting an error message.
That's a
First
good
thing I want to
question.
say, first
Yeah.
thing I want to say is if you're using the window version of the product, please download and install the update. That
Mhm.
should resolve the issue.
Yeah, and but it might be that it's not open, to be honest with you, because remember that slip emitters have until the end of February to emit the slips, right? And we're not there yet, so
Yeah, well,
it could be. Yeah,
autofill should work. Should You should be able to see whatever's there already, but
yeah.
some slips may be missing. But yes, it was supposed to be open a couple of weeks ago, but we had an update, so that should have been activated in the software to allow you to do it. But if you're still getting an message, if you've updated the Windows version, please reach out to the support team at
Mhm.
help@ufile.ca, please.
All right.
All right, so Mariam, I live in Alberta and I bought, sorry, it keeps moving, and I bought a new construction house last year. We
Mhm.
signed a purchase agreement in 2022 and got possession this year. I
Mhm.
am a first home buyer and I was wondering which year do I claim the first time home buyer tax credit? Also,
Mm.
would I qualify for GST rebates since the home is more than 500,000?
All right, so let's find out because actually this question I will call it, Miriam, the $750 question. Okay, and the reason why I say that is because the government has increased the credit for 2022. It actually, I mean, whether you're claiming in 2022, 2023, doesn't matter. So let me see what they consider in this case as. So qualify must be registered name in accordance with the. Okay, so this is straight from the government website. So what they're saying here is that a qualifying home must be registered in your or your spouse's or common law partner's name in accordance with the applicable land registration system, and it must be located in Canada. Okay, it includes existing homes and homes under construction. So that means that since you bought it and the agreement was in 2022, you had the intention of living in it, then at that point, you're good to go. You could claim the credit in 2022. So also, would I qualify for the GST rebate since my home is more than 500,000? Yeah, that I think that's the additional form. It is a new construction in this case. I believe you would be. Um, home. I'm just looking at it now. I'm just trying to find it. Here we go. So GST for new home rebate. So in this case, all right. So owner built homes, you may be entitled. Okay, so you built or engaged to build a house, land you already own, substantially renovated, et cetera, et cetera, et cetera. I'm just going to check 1 second to see. Ordinarily, you would be eligible. However, the fair okay, here we go. So now you built your home. The fair market value of the house at the time of the purchase is substantially completed is less than $450,000. Fair market value of the land, building, and other structures must be included in determining the value. So okay, it looks like no. It looks like no in this case since the home is more than 500,000. So Marion, the answer would be no.
Okay. Neil, is
Mhm.
there a way to run CRA autofill a second time to pick up late arriving slips data without all the prior download entries getting duplicated?
Um, yeah, that I'm not so sure you could do that, to be honest with you. As far as the duplication. You can go back and download new slips that have come around. The question would be, I can't remember offhand if it's a full data dump in this case, or if it's just a few slips that you could choose in this case. That I can't remember off the top of my head when you're downloading the slips. Now we do have a video on YouTube that we created that explains how it works, and I believe in that video it probably explains also your question as well. Off the top of my head, unfortunately, I don't remember. I don't remember off the top of my head.
Okay, let's go to Ed.
Mhm.
Does UFile process T3s and T5 slips in the most economical way? How do I know if there is a better way to process them?
Well, I
I'm
don't quite
assuming
understand.
it's probably split between two people.
I'm not sure, Ed, about the question because remember that now by processing T3 and T5 slips, I mean you're just entering them. It's not. I mean, I don't quite understand what you mean by processing them. In this case, is there a better way to process them? I mean, you're simply entering the slips directly. There's no Now, as far as the tax data download, if you're downloading them from the tax data download, then essentially it's just UFile is just grabbing what the CRA has. So there's really nothing different there. There's nothing really. I'm not quite sure what you mean by processing. I mean, they're straightforward, right? I mean, you have the slips, you have the box numbers of the slips, and you simply plug them in. Beyond that, I'm not quite sure. If you could maybe add some details, Ed, on that one.
Okay, Aneta is asking regarding the splitting income, the pension
Hmm.
splitting income.
Yeah.
The
Oh, okay. We lost Ida. Okay, so Aneta, it's do I enter it in both files or just mine? Okay, well, Aneta, if for example the pension income is only in one spouse's file, you only enter it in one spouse's file, and then the program will split it with the other spouse. In this case, that's how the program would handle it. So again, you enter the slips the way you see them. Okay, you have nothing to do on your end. You enter the slips the way you see them, and let the program perform the split automatically for you. Okay, that's all you would need to do. So we're going to bring back Ida here. There she is. All right.
sorry, I don't know what's happening with my laptop. Okay, um, now we are at Sue.
Hmm.
Uh, she's saying, My mother lives with us.
Hmm.
Every time I go to pay for U-File, I can't seem to add her as a family member. I end up paying twice. How can this be rectified?
No, you shouldn't. I
Is she's
I
a
mean,
depend I don't know, is she a dependent or
w-
not?
Well, remember it's a family file, right? So the moment you hit the family setting at that point on ufile.ca, then your price, of course, you have a price for people who are just single, who have no family members, and you have a price with spouses and dependents, right? So you would fall under that price with spouse and dependents. So beyond that, I don't think you're paying an extra amount again for your mother. In this case, unless you have your mother on a separate file, I'm assuming this is ufile.ca. I'm assuming in this case, but my understanding that as far as the pricing, I'm just going to go check again. Maybe I've got that one wrong, but it's one pricing for a single individual and another pricing for families. So that's and that would be basically whether it is what's called whether you have a dependent or whether you have a spouse, you get the increased price because you're filing for another family member as well.
Okay, so if you need additional help, please reach out to the support team. Okay, so Atikul,
Hmm.
do you know how to enter the Saskatchewan home renovation expenses?
Okay, so I would assume this is for older. I'll be honest. I think we'll discover it together. Let me just create a file here real quick. I'm assuming it's for somebody that's over 65. I'm just going to assume that. Um, my client, let me just put the person here as Saskatchewan province, and then I'll show you on the screen where to go. Okay, so then if I go to Saskatchewan tax and credits, labor sponsored. Okay, hold on. Let me just see here. I'm gonna check the actual guide. Just give me 1 second, everybody. I'm just gonna go ahead and find the answer. All right, so here we are. Home renovation expense. I'm just gonna see the eligibility here. You own the dwelling. You claim family based. Okay, so it could be just for anybody. Okay. All right. So then Saskatchewan credits would be, well, that's bizarre. Why am I not finding it? Just give me 1 second, everybody. I'm just going to find it now. Home renovation. Okay, just 1 second. So my province of residence is Saskatchewan. Yes. Let me go into attention political. Okay. So then I will go to medical. Okay. All right. I think I found it here. So it would be under home accessibility then. Okay, yeah, that's what it's telling me here. Select home accessibility. Okay, so then let me share my screen now. Sorry for this. So item's going to hide you for 2 seconds.
Sure.
And let me share my screen over here. So here we are.
I'm still present.
Yeah, you're gone now. So let's put it in there. And here we are. So when I went into Saskatchewan tax and credits, you'll notice over here that it tells me to go to Saskatchewan home renovation tax credit. So I figured it was the same eligibility. But that's what I was saying. I was suspecting that it was for somebody either 65 and above or somebody with disability. So over here, you just simply go to medical disability and caregiver. Okay, so you go there and then you go to home accessibility expenses. So it looks like they're eligible for both in this case, these expenses. So you go under medical, disability, and caregiver, and then you choose home accessibility expenses, and then go ahead and enter your renovation expenses, and then you just confirm that these expenses are also eligible for the Saskatchewan home renovation expenses. Okay, so that's essentially how that would work. All right, so let me bring Ida back over here. So show in stream, hide, And there we go. Ida's back. All right, let's keep going.
All right, the next question is from Rachel. For the
Mm-hmm.
T2125, I don't understand what I should put for the following: gross professional fees, including work in progress, and GST and HST collected or collectible. There's the quick method, the GST, HST collected or collectible on sales, commissions, and fees eligible for the quick method. Quick method for each applicable remittance rate includes sales commissions and fees eligible for quick method plus GST, HST collected or collectible multiplied by quick method remittance rate. GST,
Oh,
QST included in sales.
okay. So first of all, I mean,
Mhm.
gross. Okay. So all these are related to gross income. That includes your GST. That includes any GST that was collected as well. Okay, that's essentially what that is. So the first line is your gross income. That includes GST that was collected, GST, HST, or and any other sales tax that was collected on behalf. The quick method is essentially to determine the amount that you remitted back to the CRA in this case for any GST that was collected on behalf of the federal government. Okay, that's essentially all that is. Okay, for the CRA. All right, so that's essentially what all those options are.
Okay, our next question is from Sonia. How to report principal property change to rental property.
Where do you see the Sonia one? I think I had
Sonia,
Edward there.
right under Rachel, and then there's
Okay.
Sonia. Principal property change to rental
Ah,
property. How can I report?
okay, principal property to rental property. How can I report? You have to do what's called a deemed disposition, unless you're electing under subsection 45(2) to defer the election. Now, I'm not sure. I know in our professional product we do have that election letter. I'm not sure if we have it for UFAL. So what you would do here is under the rental property. I'm just going to add one real quick on my screen to see if we have that election. So, and then I'll explain what that election is. So if I go to rental property here, I will add it. And then I go here into rental. Okay, under income and expenses. Let me just check 1 second. So I'm just going to double check that whether we produce that letter. It doesn't look like we do under U file. So I'm just going to Okay, yeah, there's no change of use. All right, so what you would do, Sonia, in this case is that you have a deemed disposition. Okay, so you would have to declare the sale of the property, even though the property has not been sold. Okay, at the fair market value as of the date that you change the use of the property. This is essentially what we call in tax terms a change of use. Okay, so there's a deemed disposition that triggers in this case, unless you elect under subsection 45(2) of the Income Tax Act. Okay, and by doing that, what you're doing is you submit a letter to the CRA by April 30th of the current year, okay, of 2023, that you are electing to defer the deemed disposition of the change of use of the principal residence property to a rental property. Okay, so those are your options. So number one, you either declare the change of use and you declare a deemed disposition. However, you will claim in this case the principal residence exemption for the years that you were living in it in order to exempt yourself from any taxable capital gain. Okay. Or you don't declare the deemed disposition at all, but you submit a letter to the CRA by April 30th of this year. Okay, so in a couple of months, in other words, where you're indicating and you stipulate to the government that under subsection 45(2), which I'll put in the chat, I'll just write it out if I could spell properly here, subsection 45(2). Okay, so I put it in the chat. So under subsection 45(2) of the Income Tax Act, you are electing to defer the disposition of the principal residence because of the change of use. That's essentially what you can do.
Okay, next question is from Jerry. Do I need to claim U.S. rental property income? Can I claim U.S. expenses like furniture, etc.?
Okay, sorry, because it's like skipping
Y-
ahead because now you're
yes.
going above now. Yeah, sorry, but do I need to claim U.S. rental property income? Can I claim U.S. expenses? Yes. So Jerry, the answer is yes and yes. Okay, so U.S. rental property you do need to declare. Okay, and but remember that you could also declare the tax that you paid on that rental property in the foreign jurisdiction. Okay, so for example, I'm sure in the US you must have paid some sort of tax on that rental income because you were likely forced to declare that income in the US as well. Okay, so you declare it under the rental income section in UFile. Okay, however, you also have declared under the foreign income section as well if you paid any foreign taxes on that US rental. If you didn't, then you don't add the foreign income section. But if you did pay taxes in the US, then you also add the foreign income section and you choose the rental option. And when you choose the rental option, it's going to tell you it's going to give you an option to say what was the net rental income you've already declared, okay, on your return. Enter the amount, enter your tax paid, so you could get what's called the foreign tax credit, which is essentially a reimbursement of the tax that you paid in the US for that rental property. Okay, and yes, you could claim expenses as well. You do it like any other standard rental property in Canada. There's no difference.
Next question is from Edward. My mother has sold her principal property in June 2022. She is now living in a long term facility. How is the filing done for her change in property status? Any capital gains tax to be aware of?
So she sold her principal residence and she's living in a long-term facility. So yes, you do have a disposition, of course, that you have to declare. You do have a capital gain. However, you can claim the principal residence exemption. Okay, so meaning that for the years that your mother lived in the property, she could exempt herself from any capital gain that she needs to include on her return because she lived in the property for those years. Okay, so you do that when you're in the capital gain section, when you're going to the real estate section in the software. Okay, there's going to be an option at the bottom that's going to say, "Is this a principal residence? Do you want to claim a principal residence designation?" You say yes, and you declare the years your mother lived in it. And if your mother lived in that property throughout all those years, then she's fully exempt from declaring that capital gain. However, she still has to produce the form, okay, to designate the property as a principal residence, which is the T2091, T2091. Okay, that form has to be with the tax return that you're transmitting to the CRA. Otherwise, penalties will apply. Okay, so that's how that would work.
Next question is from Ronald. I
Okay.
live in Ontario and I have a rental property and I earn rental income. I had to purchase appliances and conditioner in 2021 in order
Yeah.
to lease the property. How
Yeah.
can I claim this amount? Will it fall under expenditure to earn income?
It'll fall under depreciable property is where it's going to fall. Okay, so in other words, you can't claim them directly. You can't claim the full amount of those expenses directly off of your net income. What you can do is that you add them to the CCA classes, as we call them, or capital cost allowance, which means you're allowed to depreciate them. Those two, basically, these are equipment. So to me, these would be class 8 that you would choose, which you would depreciate at a 20% rate, okay, as you're going along, okay, as the years go by. Okay, so that's what you would do. You claim a percentage of them as a percentage of the value of these equipment as depreciation expense, and you put both of them in one class, which would be CCA class 8. Okay, that's the class that you would choose.
Okay, next question from Genevieve. Is there any breaks for people that rent?
It depends on the province that you're in. Okay, so some provinces yes, some provinces no. So, for example, Ontario does have a credit for rents paid. I know that Quebec has one as well, and some other provinces have as well. So, really, it depends on the province. What's called on the province that you're in. Essentially, that's the answer.
Next question is from Megan. Does UFile automatically put the T2202 for dependents' tuitions over to the parents? Do we enter the T2202 under the person attending, the post secondary, or under the parents?
Okay, so in this case, what's called the DT2202, yeah, the answer to the first question is yes. The program will do this automatically unless you tell it to do something otherwise. Okay, in other words, you tell the program to carry it forward, but automatically the default of the program is to transfer it to the parent. Okay, that's the default of the program. Do we enter it in the person attending or the parents? It's the person attending. So basically, that your child that's going to transfer these tuitions to you must be a dependent in your file, okay, in order for the program to transfer these amounts automatically.
Okay, we're going back to Ed
Mm.
about the T3 and the T5 if they were optimized, and he says yes, it is split. So
It
I'm
is
assuming
split.
there's two names on the information slips.
Okay, so my understanding is that you can split them in the program. Let me just double check. I'm just gonna go to T5 and see if there's an option to split with a spouse. Um, so if it's joint account, yeah, enter the percentage, share the account. Yeah, so there is an option in the software to enter the percentage to split it with a spouse. I mean, beyond that, there's not much else to really say there. Um, there's nothing really to say there in that case. That's how, yeah, that's how you approach it. You would enter, you would split the amount and just do the same thing in the spouse's file as well. Okay, so
Okay, the next question. If I missed a tuition fee in previous year, how should I enter it now?
you must adjust the previous year. That's you have to declare it first in the year that the expense was incurred. That way the government knows of it. They know that it was for that year, and then you could claim it. You could carry it forward, for example, to a future year and claim it. Either claim it in the year that it was that the expense was incurred, and the government will reimburse you for the credit, or you declare it, and then if you didn't need it, you carry it forward to a future year, or you transfer it to a parent in this case in that year. And at that point, and if let's say, for example, you carried forward to future year, then you claim it in the future year, but they must be declared first in the year that the expense was incurred. So you have to adjust the return of that year. And the fastest way of doing that, and the easiest way, is to do it through My Account with the CRA. Go create an account if you don't have one already with a CRA. Go ahead and create an account. And at that point, simply split the what's called simply make the changes directly to your file within the My Account portal of the CRA.
Okay, Genevieve is asking, is there any way I can do a pre-run on my return to see if I owe money? And if so, I need to take out extra RSP contributions if I have room.
Yes, with UFile Online. Yeah, you could do that, I believe. With UFile Online, we'll give you a summary of the result of the return. Okay, so we'll give you like a preview of what the result is. Okay, and then once you're ready to pay, once you pay, then we give you access to all the official forms that are filled in, plus the transmissions, and plus the transmission of the return. Okay, so you could try it within ufile.ca. Just create an account, enter your information, try the return, and then make your contribution, and then go back and pay for the return and transmit.
Okay, Sue, I'm just going to go over quickly. If your mom is not a dependent, yes, she will be as a
Yeah,
separate return.
exactly.
Um,
Yeah, if you don't
because
have her as a
she's not
family member, if you
yeah.
don't have her as a family member, then you created a separate file for her. At that point, which means that you're going to pay an extra fee. The only way that you will get the family price, okay, would be to have her as a dependent in your file. That's the only way. If you have her as a separate file under ufile.ca, you're going to pay an extra price for that. Yeah, you're going to pay because it's a separate account.
Okay. Louise, yes, you can use uFile online on your iPad.
Yes, as long as you use it through your browser, right? We don't have an app in this case, but you would have to load it to your browser and then use it through your browser, essentially.
Um, Sunny, I'll skip your question. You can go look on on our website to see if you're eligible for a free return. I think that's what you're asking. I'm not quite sure of your answer. Are there any free tax return SW somewhere?
Yeah.
Okay. Robert, how do I fill in for TP 1029 grant for seniors? Mother in LTC just over a year, but long term care just over a year, but still owns family home.
TP
That trap.
1029 grant. Oh, hold on. That doesn't tell me anything. Just give me
Oh,
one
and
second.
okay. Home that transferred to
So-
her upon her spouse's death.
Okay,
I
the
have to check
offset.
as far back. Okay.
Okay, no, I got it. I got it. It's
Okay.
the offset the municipal tax increase. Yeah, that one is yeah, I mean, if you normally on your property tax bill, you should have that information right directly. So how do I fill in? Mother is an LTC just over a year, but still owns the family home. Yeah. So in this case, in the software, you would likely go to Quebec credits. That's where you would go. I'm just going to check real quick, and you would have to be of a certain age as well too, if memory serves me. For that one, you have to be, I believe, 65 or 70 and over, something like that, for that grant. And if I go to Quebec tax credits, let's see here. Tax or residential, no. For municipal, yeah, here you go. So essentially, Robert, what you can do is on your left-hand navigator in the software, there's going to be a section called Quebec tax credits. Click on that, and on the page to the right, towards the bottom, you're going to find the grant for seniors to offset municipal tax increase. So go in there and plug in whatever the municipal tax bill is going to show you, because ordinarily the municipality does the calculation. All you're doing is simply entering the amount, okay, in the software. So at that point, just like I said, Quebec tax credits on your left-hand navigator, and then on the page to the right, it's going to quote you the form, which is the TP1029.tm, which you pointed out correctly. The grant, click on the plus sign, and then enter whatever's on your property tax receipt.
Annette is asking, are the rest of the provinces allowed to claim home renovation tax credits?
Not all of them. Not all of them. Again, it depends on your province. Like Saskatchewan was one example. I know that for example, Ontario has an equivalent program as well. Quebec does not. Okay, just to give you an idea, Quebec does not have it, or I think it was there and it's expired now. So not every province has that. Okay, so you would have to check. Probably again, I'm not offhand. I don't remember every single province what they have, but I know for a fact. For example, like Saskatchewan, the question that I got before, they have it. I know Ontario has it, but yeah, and I can't remember any other province that has it.
Okay, next question is from Noel Rowena. If
Mhm.
I am self employed, do I need to file T1 for my commissions income and T2 for my business income?
Noel, it depends on if you're incorporated or not. If you're incorporated and the income is gained under the name of the incorporation, then it's only on the T2 that you're declaring it, which is the corp. For those of you who don't know what a T2 is, it's the corporate tax return. Okay, so you declare it on the T2, and then you choose how you pay yourself after that. Okay, after that, whether it's through dividends or whether it's through a salary from your own incorporation. If you're not incorporated, okay, if you're not incorporated in this case, so in other words, you haven't registered with the federal government or with your provincial government as an incorporation, then it is on the T1. Then you declare it on the T1 directly on the T2125. All the whole, all the income that you gained during the year, you would do it there.
Next question is from Louise. How do I enter Releve 1 Box A employment income that is taxable benefit related to previous employer?
Mhm.
I always enter it just in either income as 2011 benefits related to a previous uh, em- employer. Cannot add it online 101
Yeah.
employment income. Always get an error and cannot send it in electronically unless I just enter it in other income. I do not have an equivalent T4 slip. I'm retired and don't have employment income.
Okay, so Louise, what you would do in that case, you wouldn't enter it under the T4. You would enter it under the pension income section. Okay, and under the pension income section, you're gonna find an option. There should be an option there called what's called T4A pension income with taxable benefits Releve one. Okay, so you're going to go to that one. Okay, so and then at the bottom of that slip, you're going to find your boxes A and 211. Okay, so just to show you real quick, I'm just going to hide you.
Hmm.
1 second. I'm going to show in the stream. Okay, so Louise, again, right now, as you see here, I'm under the section pension and retirement income. So T4A and pension income. You'll notice here you've got T4A pension income Releve 2 with taxable benefits Releve 1. Okay, so that's the one you go to. You click on the plus sign. It'll send you to this page right here. Yeah, it will send you to this page right here. And at the bottom completely of this page, you'll notice the Releve 1 taxable benefits, which is exactly what you have. So you've got your box A, which is your Releve 1, which is included in employment income and must be on Quebec line 101. And then you got your 211, okay, where you have your taxable benefits. Okay, that's how you would do it. All right, let's bring Ida back and let's go to the next question.
The next question is from Jojo.
Okay.
Unfiled RSP past 2 years in tax return. Can I file them together with the RSP due for 2023? Please advise process. Thank you.
Yeah. Okay, Jojo. The answer is no. You would have to adjust those previous 2 years, okay, to declare the RSP contributions you made in those years, okay, because you have to account for them in the year that they were made. Okay, that's what the government requires. Okay, so again, the fastest way is you go to my account. Okay, you go to my account with the CRA website. Okay, create yourself an account. It is literally child's play to do. Okay, you could use your credentials with your bank account in order to log into it. Okay, the government has what's called partner ID, where you can simply use your credentials with your bank account in order to log in. Okay, so go ahead and do that. Okay, and you declare them in those years. And once the government has assessed your returns and they've seen them at that point, you could choose to carry it forward to a future year and then use them on your 2022 return or in the future. Okay, but you have to adjust those 2 years. You have no choice.
Next question is from Devin. My stepson is 20 on March 10th and worked full time as a mechanic's apprentice for all of
Mm,
2022.
mhm.
Since he was still technically a student, can we file him under our family taxes under U file for 2022, or does he need to do a separate file?
I don't believe he needs to do a separate file. The only thing I'm going to check is the fact that because he's an apprentice and he's an apprentice mechanic in this case, he likely had to buy tools, okay, in order to do his work. Okay, so in that case, ordinarily your stepson would be entitled to additional deductions, okay, on their tax return. One for a tradesperson tools, and the second one for an apprentice mechanic. Okay, so I'm just gonna check to see if he can actually claim those while he's a dependent for you. So I'm just going in the file right now. Yeah, it looks like you can. Employment expenses. And then if I go here, there you go, apprentice mechanic. Perfect. So yes, the answer, Devin, is a yes. So you could transfer, for example, his excess tuition fees that he does not need to reduce his federal tax and provincial tax to zero. Okay, and at that point, you could also try to claim the tradesperson deduction and apprentice mechanic tools deduction. Okay, you do that under employment expenses. So in his file, but again, he must have bought tools though. Okay, he must have bought tools. He must have bought tools himself, meaning that his employer has not reimbursed him the cost of those tools. Okay, if he bought tools on his own, then at that point you go into his interview setup section, and while you're in his interview setup, there's a section on the right where you're choosing in this case you're going to choose in this case employment expenses. Okay, you're going to tick the box next to employment expenses under the employment section. Once you do that, go to the employment expenses section on your left hand navigator, and on the right you're going to see an option for apprentice mechanic. So click on that, enter the cost of his tools, and the program will try to claim the two deductions in that case, which he is entitled to if he bought tools himself.
Okay, next question is from Amin.
Mhm.
How to claim the depreciation on the rental property which has been reported in the past and misclaimed for last few years?
I mean, you're gonna run into trouble. That's all I'm gonna tell you. You do it through an adjustment. Okay, you would have to do a T180J in that case, but just from experience and administratively speaking, the CRA might flat out refuse that. Okay, because they might think that you are doing abusive tax planning. Okay, so you'd have to be careful on that. I will call the CRA. Call the CRA directly and tell them exactly the question, though, as the way you asked me, and ask them if the government might trigger an anti-avoidance rule in that case, because usually the government gets very touchy with depreciation expenses when you're going back. They usually get very touchy on that, because they feel sometimes they might be abusive. So just be aware of that. Okay, so call them up. The answer is yes. Technically speaking, you do an adjustment of your T776s, and you would have to produce the form called the T180J. This would be one adjustment you will not be able to do with my account with the my account portal of the CRA. You would not be able to do it there. You would have to actually get the form, which is the T180J. You would produce a new T776 that you would attach with a T180J. But my recommendation to you, I'm speaking to you from experience, call the CRA up and find out if they would think that this would trigger an anti-avoidance rule.
Okay, next question is from Atiquil. Sorry if I don't pronounce it correctly.
Yeah.
My friend lives in Dubai. However, his family lives in Canada for the whole year 2022. How do they file taxes?
So Antiquil, I will show you something. I will show you a magic trick that the Income Tax Act will do. The Income Tax Act actually defies the laws of physics in this case. And what do I mean by that? I mean that even though your friend lives in Dubai and is physically not in Canada, because his family lives in Canada, he is considered a factual resident of Canada. So you do nothing special with his return. You just assume, you just produce the return, you just produce it like any other Canadian. There's no difference than any other Canadian resident. Okay, because in this case, his family represents a significant residential tie to Canada. So even though physically he's not in Canada, to the Income Tax Act, he is considered a factual resident of Canada. So therefore, he files a return like anybody else.
Okay, next question is from Noel Rowena.
Mhm.
How do you report revenue generated online via Stripe payment processing platform?
I'll be honest with you, Noel. I'm not sure what Stripe is. I'll be honest with you. Can you give me a bit more details on that?
I
Because
think
I don't know
Stripe
what.
is like those little things where you can collect payment. Like instead of using Visa or something, the cards,
Okay.
from the bank.
Well, that,
I
then that
think
would be
it's
business income. I mean, that would basically essentially be business income because you're running a business is essentially what you're doing. Unless it's a royalty, unless it's some invention that you have and you're collecting a royalty out of it, then that would be a little bit different. You would include it as investment income on a T5. You would pretend to have a T5 slip in that case, and there's a box number for royalties. But this seems to me like business income. That's how I would view it, because you're collecting a fee essentially for something that you are providing. So at that point, to me, would be business income. That's my instinct in this case. It would be business income, and I would include it on a T2125. So business income. That's what I would say.
okay. Sima has two questions. How
Yeah.
can I claim moving expenses? And the second one, is there any tax relief for remote work?
Okay, so first question, which I'm showing here, can I claim moving expenses? The answer is just like any other tax question, it depends. Okay, it depends whether you meet the criteria for moving expenses. So if the reason for the move was to move at least 40 kilometers closer to your work location or to a new job, okay, then in that case, then yes, your moving expenses are deductible. Okay, you could claim them under the form is called the T1M, and in U file. In this case, you would claim them under, I think it's miscellaneous credits, and you would claim them under the moving expenses. Okay, so let me just check in the interview setup what section that would be. It would be just 1 second. Let's go here. It would be, I believe, under miscellaneous usually. Where are you? Other topics. Sorry, it would be under topics. It would be moving expenses. Now remember that you're going to be capped to your moving expenses are capped at the working income that you gained in the new job or in the new work location, as they call it. Okay, so that would be the answer. So, but remember, the move has to be for work, and it has to be at least 40 kilometers. Okay, it has to get you 40 kilometers closer to your new job or your new work location. Okay, that's question number one. Question number two: is there any tax relief for remote work? Yes, you could claim your work from home. You can claim expenses related to your home office. Okay, whether it, now if the reason for it was COVID, then you could claim them under the what's called the flat rate method, where you're claiming $2 per workday that you worked at home because you were required to due to COVID. That is still applicable. We mentioned these in previous Facebook lives in previous years, but it's still applicable for this year, which I believe will be the final year that this method will be applicable. Okay, otherwise you are claiming your expenses that are related to your home office. And what usually is allowed and deductible is essentially, for example, your electricity, your residential internet, your rent, and so on. Okay, these are some of the expenses that are deductible. And remember that you can only claim a prorated value of those amounts. So essentially, you have to take into account how much of the square footage of your home office represents. What's the percentage of the square footage of your home office that it represents vis-a-vis the rest of your home? Okay, and you're only allowed to claim only that percentage of those expenses.
Okay, Atikul has another question. Is there any way I can calculate how to maximize refund for the RSP attributions?
Is there any way I can calculate how to maximize my RSP? I mean, it's trial and error basically. I mean, you could try it in UFile and just try trial and error and see what you get out of it. In that case, there are RSP calculators, but they're not necessarily very accurate because they base themselves mostly on marginal rates, which are not necessarily accurate for your situation. Your best bet is if you already have most of your slips, you've already got most of your information, just do some trial and errors, in the software and see what comes out of it.
Okay, Sunny, in
Mhm.
UFile, how many years can you go back to refile the return after assessment?
I believe, Ida, maybe you quote me on it. Maybe you quote me on it. I believe it's 3 years back, isn't it? That you could do
Refile,
refile.
maybe.
I believe it's 3 years back, but we'll get back to you, Sunny. We'll answer in the chat. I don't remember offhand, but I believe I don't know. My instinct tells me 3 years back.
Okay. Um, that's fine. Robert was mentioning that that was the home being transferred to the mother. Nothing is showing
Oh, okay,
on his
yeah. So you're
municipal,
talking
the
the
TP
grant.
1029.
Yeah, the
Yes.
grant. Yeah, okay. Then usually you won't be able to claim anything. In that case, like I said, it's always the municipality that will perform that calculation. So if it's not there, that means you wouldn't be entitled. That's how usually that credit works.
Okay. Next question is from Dana.
Hmm.
I received T3s, T5s, and T5008s for
Hmm.
investments I have in trust for my children. I have always claimed the gains, losses on my kids' respective returns with no issue. However, for 2021 tax year, CRA made adjustments and applied those gains, losses to my income. Is there a way in UFile to
Sorry to claim to allow maybe.
annoy my to allow my desire to claim these funds in my kids' returns in order to avoid unnecessary reassessments going forward?
Well, I think you hit attribution rules. I think that's what happened there. That's why the CRA, because your kids are probably young. So in this case, this is why if your kids are less than 18, usually these will get you basically hit um, what's called you basically hit the attribution rules in this case, and you might have even hit the what we used to call the kiddie tax, which is the tax on split income, depending on because in this case, you have trusts that is likely related to you. So it's likely that in that case, you would have been hit with the kitty tax or what we call TOSI now, a tax on split income. In that case, which means basically, especially if it's dividends in that case, they're going to get charged a high rate on your child's return. It would be a specific form. I can't remember now the form number off the top of my head, what form number that is, but that's what would happen. I mean that um, it's hard for the software to know offhand, whether you would trigger because these are very particular rules in this case, these attribution rules. I would say in this case, simply include them in yours. Just be mindful of the fact that the moment these are income amounts from an entity that is related to you. Okay, the government is going to assume automatically you're trying to split the income and avoid the tax. Okay, that's what they're trying. That's why they enacted those rules, especially the tax on split income rules. So in that case, what I would do is contact the CRA and find out what income is supposed to go where, and then just plug it into the software that way. But if it's, for example, interest income or any other types of income, usually they get attributed back to you. If it's dividend income, then it stays in your child's file, but your child in that case would likely have to pay tax on split income, meaning that your child would pay the highest tax rate that's in the tax brackets. Okay, and again, it's an anti-avoidance rule. That's what the government is doing because the government is assuming you're trying to split the income to avoid a high tax rate on your return.
Next question is from Gonzalez. Betty Gonzalez. Does BC have children's sport activities tax credit as before?
Very good question. Let me check the guide. Just give me 1 second. Let me see. If you have it again, I don't remember off the top of my head all the provinces, but I will check now. Just give me 1 second. Activities. This would ordinarily be okay. I'm not seeing anything on the BC 428, which is the form that gets included with your tax return to compute your BC tax. So unfortunately, I'm not seeing anything. So it looks like it's not there anymore. Maybe it was there. I'm assuming it was there. I don't see it anymore, unfortunately.
Okay, next question from Sonia. Do I need to claim if I have a house overseas which I live when I go there and not it's not rented?
Um, you would likely have to declare it on the T1135. That's what I'm assuming. Let me just check if it will fall under an exclusion. But normally this would be under the foreign income verification. I would assume it would have to be declared there. But let me just double check to see whether real estate that you use personally is exempt, because I know real estate in general is not. But let's see here. What property do you have to report? So let's see here. Shares, interest, a property that is okay, debt and interest. A share, a property used, held exclusively. But then hold on, what does the table say? Other than personal use and real estate used in an active business. So in your case, what was it, Sonia? It was what was it? Which I live when I go there, not a rental. So no, you would not have to declare it then. You would not have declared in that case because it falls under one of the exclusions of the T1135. Okay, which is that you're using it for personal use. So at that point, it falls under an exclusion.
Okay, next question from Hugo. I own I owe taxes and doing PAD. If I will get a refund, should I stop the payments and get the refund minus what I owe?
Sorry, PAD is it's not
Pre
registering. It's not registering in my head.
the those quarterly payments?
Installment payments you're talking about? I
Yeah.
owe taxes and doing. If I get a refund, should I stop the payment and get the refund minus what I owe? Okay, if I'm assuming installment payments, no, you still have to pay, and then the government will reassess afterwards. That's essentially how that would work. So make the payments as per what they say, and then they'll make they'll make the adjustments afterwards.
Next question from Devin.
Mm.
Um, how do I apply for the 2023 Ontario Trillium benefit? And is there any income threshold to apply? I received something from CIA earlier this year saying we should be applying, but have never received it in the past.
Yeah, the trillion benefit depends. It depends on what you're claiming. If you're claiming the sales tax, I believe it's automatic. It's done with the GST credit claim. But if you're claiming the other amounts, which is one of them is for housing, then yes, you have to declare it. And you have to declare the form is the ON dash BEN, so ON Ben as we call it commonly. Okay, and in that case you would have to declare it because you have to declare the rent that you paid, okay, in order to claim the amount that portion of the trillion benefit, right? But for the GST portion, I believe it's automatic, or the sales tax portion, the HST portion, I believe is automatic now. You don't have to actually declare it.
Okay, next, Tony. Thank you for your dedication,
Yeah,
Tony.
that's great, Tony.
Your confidence in us. Okay,
That's great.
his question. I bought a year GIC in July 1st. Do I have to claim 6 months in each year, or can I wait until it's matured?
No, you declare the interest that you accrued from July 1st till December 31st. That's what you're declaring. Even if you haven't cashed it in, even if you haven't actually collected the amount from the GIC, doesn't matter. You've already earned it, especially if it's in a taxable account. Obviously, I'm
Mhm.
assuming this is a taxable account. So in a taxable account, yes, you would have to declare it. So in your example, you bought it July 1st, which means from whatever interest was accrued between July 1st and December 31st, you have declared as interest income on your return. Ordinarily, the financial institution you bought it from should be sending you a T5 slip with that amount. You shouldn't have to compute it yourself. The financial institution should already have sent you, or they're about to send you a T5 slip that's going to indicate the amount.
Okay, next question from Valerie.
Mhm.
I co-own an overseas apartment with my brother, which we use for vacation. We also rent it out for the winter season. Do we need to declare the rent we receive? It really just covers our cost.
The answer is yes, Valerie. You're gaining an income, and now you fall under the overarching tax rule, which is Section 2 of the Act, which essentially tells you that you have to declare your worldwide income. So, no matter what income you've gained, you declare it. But remember, you can also deduct your costs. Okay, so it doesn't mean you're just declaring the income. You're going to declare the income that you gain from the rental from the rent, and then you also declare whatever costs that were incurred to level off your income. But it has to be declared though. Absolutely, you have to do it.
Okay, I think Hugo is giving a little bit more the specifics. His
Mhm.
former employer released his T4 by April 6th, and he got reassessed, and that is why he is paying on a monthly. I believe it's monthly. He says a little bit further out.
Is part
Um,
okay.
it's part of my fault that I filed out my taxes at the end of the February, or is it the fault of the former employer? What should I do?
Okay, so you already had a T4 slip. So
Well,
your
I
employer
guess
sent the T4 slip, and then they made a mistake on the T4 slip, and they sent you an amended. Is that correct? My former employer released my T4 by April 6th, and I got reassessed, on which I am paying. Okay, what's called? It is part my fault that I filed out my taxes at the end of February, or is it my fault of my former employer? It depends. If you filed, um, what's called? If you filed your tax return without a T4, in other words, you used your paycheck in this case, your paycheck in this case, to file the return, then in that case, yes, you would be responsible in that case. But if your employer submitted to you a T4 that had errors on it, okay, and now you had to pay extra tax, then yes, you have some recourse against your former employer. Now, what you don't have as recourse is the extra tax you have to pay. That is out of your pocket. You have to pay that, okay? Because had your employer done it properly from the beginning, you would have paid that amount anyways, okay? What your employer would be liable for is any interest charges that the government has charged since then because you're late paying your tax. So that you do have recourse on. Okay, you likely would have to go either demand it, and if they don't accept, you would have to go to small claims court. Okay, but the amount of tax that you have to pay, though, that unfortunately you have no recourse. You have to pay that at that point.
Next question from Ricardo. I over contributed to the RSP, but due to needs, I also made a withdrawal. How do I declare this as you file tells me that I have over contributed and they might charge me 1% a month?
Over country, but due to needs, I also made a withdrawal. How do I declare this in file? It tells me that I've over contributed. Well, Ricardo, what you should have done in that case is basically a refund of excess premiums. Okay, that's essentially the procedure. I think you might still have time to do it because normally you're allowed the government gives you about a 90-day period to essentially cancel your contributions. Okay, you do it under a specific form. You go to your financial institution; they should know what to do. Okay, and at that point, you ask for what's called a refund of excess contributions to quote unquote cancel your contributions essentially. That way you wouldn't have an over contribution and you wouldn't have any income inclusion to make. Okay, at that point. All right, so that's the only thing you can do. Unfortunately, the over contribution will be applied if there is no cancellation or a refund of excess contributions.
Okay, next question from Amin. Rental property depreciation was entered in CAA Class 8 in U file for the last few years. However, when the printout of the file return was downloaded, I found out that the U file did not report it in the final return calculation.
Okay. I mean, for that one, we'd have to look at the file. I mean, you'd have to contact our support staff. It's because that's very specific. I don't know why the program wouldn't have claimed Class 8 unless either it's a glitch of the program or you might have accidentally limited the CCA. So, barring seeing your file, it's kind of hard to determine in this case why the program didn't do it. So, your best bet is contact our support staff. They'll likely ask you for a copy of the file. Now, when we ask for copies of the file, what's great about it is that it's completely anonymous. We don't see your name, we don't see your SIN number. Everything gets scrambled, but we do see, of course, the forms and the entries you have done. That way, we could get to the bottom of it to see what happened in your file.
Next question comes from Jerry. I will be filing taxes for my elderly in laws online. Do I need to tell the CRA that I am doing this?
No. No, you don't. Don't worry about that. I mean, yeah, the CRA does crack down on preparers that do this in the black market. For example, they just collect cash and don't declare themselves as taxpayers. But they limit that. That's where you have a limitation of 20 transmissions and that's whether it's UFile or our competitors is exactly the same rule. You're capped at 20 transmissions per computer if you're using the Windows version. So you're tapped out at 20. You can't go above that. So because above that, the government assumes that you are a preparer. Okay, at that point, you're basically, they want you to declare your income. But in this case, if you're just doing a couple of returns here and there, no, don't worry about that. The CRA is not going to get it's not going to get fussy over that.
Next question, Sima. Remote home expenses for T4 employees, or is it only applicable for self-employed?
For both. For both, actually. You could claim home office expenses, whether you're an employee or whether you are self-employed. The key, though, is that there's more conditions when you're an employee, okay, and and there's less expenses that you're allowed to deduct, okay, as an employee than if you are self-employed, okay. But both can do it, okay. And on both sides, you can do it. The key, though, one of the main conditions if you're an employee is that your employer has to sign off. Okay, so they have to produce what's called the certificate form or conditions of employment, which is the T2200 form, T2200. It must be signed off by your employer. Okay, and in that case, it must be signed off by your employer in order for you to deduct your expenses as an employee. If you're self-employed, there's no such conditions in that case. You're simply claiming your expenses, and you're allowed to claim actually more expenses as somebody who's self-employed than versus somebody who's an employee.
Okay, we're going to stop taking new questions. We're going to finish the ones we have in the queue.
Mhm.
And next one is Atikpool again. How do I file the final tax return for a deceased?
You must indicate to the software that the individual is deceased. You do that under the interview setup again. You go to the first section of the interview setup. Okay, the first of the where it says specific situations. You tick the box next to tax return for a deceased person. Click next, and then there's going to be a new section that appears where you're going to have to indicate the information of the deceased person. So, for example, when did they die and what type of return you're producing, because you might have multiple returns to produce for this individual. Okay, of course, you're going to have a final return to produce. That's number one, but you might have some other returns as well, like a rights and things return as well. So that's what you would do. So interview setup. Go to specific situations, which is at the top left of the page to the right. You tick on deceased individual or a tax return for a deceased individual. Then the deceased section will appear in the navigator right underneath. Go there and then just answer whatever questions need to be answered.
Next question from Gulnar. I hope I pronounced it right. Where is the best way to report foreign pension income on your tax return?
Where is it best to report foreign pension income on your tax return? You do it in the foreign income section. That's what you would do. So under again interview setup, you go back to the interview setup, and when you go to investment income and expenses, there's a section there called investment income and expenses. You're going to see a tick mark for foreign income or foreign property. Tick that. Click next. Go then on your navigator to the left, go to foreign income, click there, and then on the page to the right, you're going to see a section called foreign pension. Go there and enter your amount. The only thing I want to add when it comes to foreign pensions is that for a lot of foreign pensions, there's usually an exempt amount of that foreign pension. So I strongly urge all of you to go to the tax treaty, if there is one between Canada and the source country of the pension, and find out whether there is an exempted portion of that pension on the return. Because for a lot of these pensions, there's usually some portion of that income that is exempt. Okay, under treaties between Canada and those countries.
Okay, Pauline, will I get a Releve 3 for the sale of a unregistered fund, or maybe she means an information slip?
Well, Relevate 3 is a T5, right? It's the
Okay,
equivalent of a T5 slip. If it's a sale, yeah, of unregistered funds, I'm just assuming these are like basically mutual funds that are in a taxable account, right? So no, you will get a T5008 and a Releve. I can't remember what the equivalent in Quebec. I think it's Releve 18. I think I can't remember now,
I don't remember the
but
equivalent.
yeah, I don't remember the equivalent in Quebec. But you're certainly going to get a T5008. That's going to indicate the disposition in that case.
Genevieve, does CRA mail out the T4APs and T4A AOS? Yes, they should have been mailed out already. Usually
Oh
they
yeah.
send them out in January.
Yeah, they're usually by the end of January. You should have them already by the end of January.
Okay, Alan, can you please tell me more about the caregiver benefit?
Are we talking about the credit? I'm not sure about benefit. Okay, just see if I'm missing something here. But And yeah, it's the caregiver credit. Okay, so that's yeah. So the so that's where we're going. Yeah, so the caregiver credit, very simply put, this is where you can claim a dependent that has what the government considers an infirmity, meaning that they have some sort of ailment on them, but they're not necessarily disabled. Okay, so you would still need a doctor's note to indicate that they have some sort of, either some sort of health issue in this case. And when you have that confirmation, then at that point you can claim that this non-refundable tax credit, which is the caregiver tax credit, at that point, which is just a credit that you use to reduce your federal tax owing. Okay, so remember that. So now, depending on what type of dependent you have, whether it is a dependent that's less than 18, whether it is over 18, the credit amount changes. Okay, so and where you claim the caregiver credit will change depending on the age of the individual in this case. So, for example, if it's somebody that's over 18, it is a specific line. If it's somebody that's less than 18, it could be an eligible dependent, and so on. So there's a bunch of lines on the return, but just remember the criteria that you need is that it's somebody that is blood related to you. Okay, number one, so it could be your parent or it could be your child, etc. And number two, that person has to have what the government considers as an infirmity, meaning they have some sort of physical ailment that is confirmed by a doctor's note, but you don't need a disability certificate. You don't need to go to that level. Okay, if you do have a disability certificate, even better, you're automatically eligible then as well.
Next question from Sima. My son had an accident with very high health expenses in Thailand. Can he claim the health expenses, the
Well,
medical
sorry,
expenses?
Seema. Yeah, sorry, Seema, for hearing that. So had an accident, very high health expenses. Yeah, I mean, ordinarily, yes. To me, they would, because I don't think the expenses would be limited to Canada. In this case, you should be able to claim some of those expenses. I would still confirm with the CRA to see whether the expenses have to be incurred in Canada or not. I don't believe so in this case, but just double check with them as well.
Okay, Noel Rowena. What is the rule for reporting GST for online revenue generated from USA clients? Never charge GST on the clients. They just pay a fixed price for the services they received.
Well, you would have to remit it, is what I would assume. If you're a GST registrant already, I mean, it doesn't matter whether that person is in the US or not, you would still have to charge for the service for the GST. So to me, you would have to remit it. Again, I would contact the CRA. I'll contact the CRA to see what, do you do it under your regular remittances, or is there something special that you would have to do in that case?
Okay, next question from Karen. Um, where is the T1A form on the U file for requesting loss carryback?
Okay, so let me just show that real quick. So I'm going to hide you again. And let's show in the stream over here. So okay, so I'm on the interview setup right now. Okay, so that's the interview setup again. Once you are on the interview setup, okay, there should be a section called carry forward amounts and prior year information. So you have losses of prior years and carrybacks. Okay, so you click on next. Okay, and once you've done that, you're going to see in this case on, I can't see it here. Let me just hide the question. 1 second. So once you're there, you're going to see right here a section called losses of prior years carried back that gets added once you've added the section from the interview setup. Click on that. And then you choose, in this case, the T1A form right here, request for loss carryback. Click on the plus sign and then go ahead and carry back your losses. All right, so let's bring Ida back. I think that covers it, Ida. Huh?
One more question.
Mhm. It's Lisa, right?
Lena.
Oh, Lena. Sorry. Yeah, Lena.
Her question is, do you still have to mail a return for deceased person or can you submit it via U-File online?
I think it's still an exclusion, but in either case, UFAL will tell you. I mean, UFAL will indicate to you whether it's eligible or not. It'll tell you right away whether it's an exclusion or not. My understanding is that it's still an exclusion. I know professionals can submit it online. I know that through e-file in their case, but I can't remember for individuals in this case. But my instinct tells me that it's no. But again, UFAL will indicate it to you. So just follow what UFAL tells you.
All right, that concludes our questions for today. and concludes the Facebook Live event. The video will be available on Facebook, and we will also download it and post it on our YouTube page. Jerry, any last words before we sign off?
Yeah, so we have a lot of resources that we make available to all of you through our website, which is at www.ufile.ca. Okay, we have a tax blog that's in there. So when you go to the tips and tricks tab of the UFile page, you're going to see an option for UFile blog. Go in there. We write regular articles about various tax topics, including the latest one that we just put in there now for tax changes. We also have our YouTube page, which has a lot of information on how to use the software, the tips and tricks on how to navigate the software, and also how to and also different tax topics as well. For example, the tax changes that I mentioned, the blog, we've also put it as a podcast as well. For those of you who want to listen to our podcast as well, we're on Google Podcasts, we're on Apple Music, we're on every major podcast provider. Okay, and we again we provide various topics where me and Ida are discussing various tax topics, and we give you tips and tricks on that. Do not hesitate. We provide all this information for you, and we provide it. Here's the key: for free. Okay, we literally give all these tax tips and tax information for free, like this Facebook Live as well, where we answer your questions for free. Okay, so don't hesitate to use our resources.
All right, that concludes the Facebook Live event for today. Thank you for listening, and we should be back in about 2 weeks for another session.
All right,
All
thank you,
right,
everybody.
thank you. Have a good afternoon.